Welcome everyone to Vested Interest. This is Shane back again for their Stock Pick of the Day video. It is the first day of May, and what a doozy it was. The Fed did come out and say they are going to keep rates the same, and we had a lot of stocks that dropped off the map today. First day of May, I will remind you there is an old saying, sell in May and go away, so we may be in for a lot of selling this month as people get ready for summer and sell out of some positions that maybe they were up in and then come back in the fall after summer's over, and we'll see how it goes. But first day of May, and we are going to take a look at Starbucks. This is out of the consumer discretionary sector. Let's jump right in. And before we get into the video, if you would take a moment to help me out, it only takes you a second. It doesn't cost you a thing. Hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community and hit that notification bell so you're notified whenever we put out any new content. I do stock pick of the day videos like this Monday through Thursday. Every day the market is open. I also do a portfolio update every Sunday morning. I do a update on the overall monthly portfolios and options once a month, as well as the stocks I'm looking to buy as we go into the following month. I just put out the stocks I'm looking to buy in May video, so go ahead and tune in for that. Really appreciate everyone out there who has taken the time to do that. It really does help out a small YouTube channel like me grow. It helps get the word out. Dividend growth investing, that's what we focus on this channel. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level to see if I'm interested in investing. If it meets 5 of 8 or 6 of 9 if it's a bank, I add it to my watch list, do more of a deep dive into the financials, and then figure out a price by doing a discounted cash flow analysis that I'm willing to pay for the company's stock, and then wait for the stock price to come in line with that. Again, this is a high level review, guys. This is not getting into the financials of the company. This is not getting into the balance sheet, the books of the company, so to speak. At really high level here, I'm just trying to present some information to get you maybe thinking about companies or seeing where there might be some value, or just stocks that have pulled back on the day. That's really the focus here. And then we do suggestions. So if you have companies like this, like Starbucks, you'd like me to cover in the Stock Pick of the Day series, go ahead and drop them down in the comment section below. Now back to Starbucks. If you want to know more about this company, check them out at www.starbucks.com. That's www.starbucks.com. That is their homepage where I pulled this information from. And most of you are probably very familiar with this company, right? They sell coffees and teas and some food out of their stores, retail stores. They also sell, single serve coffee for some of the coffee dispensers out there that you can make at home. But let's get into their history a little bit. Our story begins in 1971, that's 8 years before I was born, along the cobblestone streets of Seattle's historic Pike Place Market. It was here where Starbucks opened its first store, offering fresh roasted coffee beans, tea, and spices from around the world for our customers to take home. Our name was inspired by the classic tale, Moby Dick, evoking the seafaring tradition of early coffee traders. 10 years later, a young New Yorker named Howard Schultz would walk through these doors and become captivated with Starbucks coffee from his first sip. After joining the company in 1982, a different cobblestone road would lead him to another discovery. It was on a trip to Milan in 1983, and I've been to Milan actually, in 1983 that Howard first experienced Italy's coffee houses, and he returned to Seattle inspired to bring the warmth and artistry of its coffee culture to Starbucks. By 1987, we swapped our brown aprons for green ones and embarked on our next chapter as a coffee house. Starbucks would soon expand to Chicago and Vancouver, Canada, and then on to California, Washington, D.C., and New York. By 1996, we would cross the Pacific to our first store in Japan, followed by Europe in 1998. That was the year I graduated high school, and China in 1999. Over the next 2 decades, we would grow to welcome millions of customers each week and become part of the fabric of tens of thousands of neighborhoods all around the world. In everything we do, we are always dedicated to our mission. With every cup, with every conversation, with every community, we nurture the limitless possibilities of human connection. And again, they are a coffee house, right? They are a place where people might gather to meet, to have coffee, to have to have conversations, to meet people, or to have, business meetings. That's kind of what they do. You'll find them all over the place. I mean, I see them everywhere I go. My wife and I were recently down in Mexico. They're all over down there as well. So they're all over. They are expanding. I don't know that they're expanding a lot in America still right now, but they definitely are trying to expand overseas. I think China is the big one that they're focused on right now, though I believe they have some interest in expanding in India and continue expanding in Europe. Now, the reason we are taking a look at them, down 15.88% on the day. We are talking about Starbucks Corporation, ticker SBUX, out of the consumer discretionary sector. Closed out the day at $74.44, and you can see the chart, a huge drop. Looks like they tried to recover a little bit, but overall, I mean, that's a huge drop. That's a big drop for a year, let alone just one day. 52-week range as low as $72.67, as high as $109.72. So they are right up against their 52-week low right now. Market cap of $84.318 billion. A beta, they did not show a beta, though I'm guessing they're more volatile than the overall market right now, in which with this drop may be why they didn't show the beta. Price to earnings ratio, PE ratio, 19.9. $19.90, not ridiculously high. Again, the market I think is around 22, 23, so it's lower than the overall market. EPS, earnings per share, sitting at $3.74 per share. Earnings date, July 30th through August 5th. Sometime is their next one. I believe they had one today, actually, which is part of the reason they dropped so much. Forward dividend yield, $2.28. Forward dividend, $2.28 paid on the year. They're quarterly pairs, so divide by 4, though we'll see that here in a minute. Dividend yield currently 2.58%. Nice starting dividend yield. Ex-dividend date, May 16th. They are going to pay out May 31st. So if you were to buy them now, you would be in line for their next dividend. You would also get the dividend by the end of the month. And a one-year target estimate, at least according to Yahoo Finance, where I pulled this information from. I am not affiliated, just one of the sources I go to for information. $102.95 per share. So they see some upside from here as far as price appreciation. Now, if you were to go to Yahoo Finance, and over here on the left of the chart, you would see a lot of tabs you could click: analysis, statistics, financials. And if in this case, we're going to go into the statistics tab. We're going to look at dividend yield theory. To do that, we look at their 5-year dividend yield average, 1.95%. We compare it to the current, 2.58%. Over here it says forward dividend yield, 2.58%, same number. And since it is higher, that speaks to undervaluation. Not only undervaluation, but a nice margin of safety, at least according to dividend yield theory. Payout ratio is low. I like 75% or less. This is sitting at 57.75%. So it is under the metric that I look for there. Now, same thing if you were to go to Yahoo Finance and go over here to the left, we're going to go to the financials tab. You find a lot of good information there. You'll find their balance sheet, their income statements, and you should be looking at the balance sheets and income statements if you are looking at individual stocks. If you do not want to do that type of deep dive into the company's financials, you should not be buying individual stocks, because you will not understand how they make their money. Is their revenue growing? What do their margins look like? Are they growing or expanding? Are they paying down their debt? Do they have more assets over liabilities, which is everything that they need to have? Are they growing? Is there free? We're going to look at free cash flow. We want free cash flow growth, because typically if a company has growing free cash flow, they have growing dividends to go along with it. That's what dividends are paid out of, free cash flow. So we're going to go back to 2020. We see $114 million in free cash flow. We see 2021 huge jump up to $4.5 billion. 2022 looks like a drop down to $2.5 billion. 2023 to $3.6 billion. Overall, definitely seeing growing free cash flow. And though it looks a little, up and down here, if you look at this row, repurchase of capital stock, you can see that they repurchased 1.6 billion shares in 2020, so they were down a little bit. None in 2021 when they were up significantly. 2022, huge repurchase here, 4 billion. So I would say this 4 billion repurchase of shares more than counts for the decrease from free cash flow. So they didn't really have a decrease in free cash flow. They increased their repurchase of capital stocks. And then that went down, so you can see their free cash flow went up, but still repurchasing their own shares. So I like that they are pulling shares out of the market by buying them, especially if they continue to do it while they're down, like right now. And I like the growing free cash flow. Now we're going to jump over to stockanalysis.com. I always recommend more than one source so you can make sure the information you're getting is accurate and up to date. You don't have to use the sources that I use. Just make sure you're not just blindly trusting one source, because sometimes the information is outdated or it is wrong, right? Everyone makes mistakes. Don't just blindly trust what you see on the internet from one source or from some guy on YouTube you've never met. There are 22 analysts from stockanalysis.com that have taken a look at this. They call it a consensus buy, though it is right on the edge here of a buy and a hold. If you were to go to their website, you could click on each one of these, right? This would be a strong sell, hold, buy, strong buy. And out of the 22 analysts, you could see how many were calling it each one. I'm assuming some are calling it a hold, some are calling it a buy, some may be calling it a sell, some may be calling it a strong buy or strong sell. Go to their website here on stockanalysis.com and check that out, and you'll know out of those 22 analysts where they sit. But more are either calling it a strong buy or a buy than are calling it a hold or a sell. And that's why it's on the buy range. So low estimate of $80 currently sits under their lowest estimate. So if it was to come back up to their low of 80, that would be a 7.43% increase from where it currently sits. Average estimate $100.36, which is pretty close to what we saw with Yahoo Finance on the previous page. That would be a 34.77% increase. And if it happened to hit their high of $150, that would be a 101.42% increase. You double your money from where they currently sit, and that would be very nice. This is probably pretty in line with what I would expect. And I love it whenever I see all of the metrics above where it currently sits. So that tells me this one might be significantly undervalued based on these analyst estimates here. Now, we're going to go to the statistics here, and we're going to look at how efficiently this company is utilizing its capital. I look at return on equity and return on invested capital like 10% or better. Return on equity of this one is negative 49.8%, which I get it. A lot of companies like Starbucks are in negative ROE because they are constantly using equity to buy, create new locations, build out new locations, and expand their territories, right? So I get that. That's common. Return on invested capital very high at 25.46%, beats the 10% I'm looking for. EPS growth, I like 5% or better forecasted over the next 5 years. They are at 17.57%. If they really do that, that is smoking high. That would be awesome. Revenue growth forecasted at 10.46, same thing. That's very fast revenue growth at double digits forecasted over the next 5 years. We'll see if they do that. If they really match these numbers, that it would be very, very good for this company. Now, as I stated, I am long Starbucks. I just started a position here in the last month on this one, so I'm just starting to build this out. So I love the pullback. I actually, wink, wink, nod, nod, I added some today on the pullback. I didn't quite get it at the bottom here at 74.44. I think I was in the 75 ranges whenever I bought it, but I did add to my position. Currently, I have 25 shares. I am down 9.49%, big drop on the day. So I'm not down, the 15% it dropped today, but I am down 9.49%. I have $2,056.06 into it. It's currently worth $1,861, so I'm down $195.06. Don't care at all. I'm going to continue to build this out to at least 100 shares, maybe 120, 140. My wife is a Starbucks visitor, so I want them to be paying for my coffee with my dividends, or her coffee with my dividends. And really, I think she drinks more tea than coffee, but that's neither here nor there. Now, quarterly payout ratio, they're saying 62.81%. It's under the 75% I'd look for. Dividend growth, very nice, high single digits, 7.69%. 14 years of dividend growth. Buyback yield of 1.5%. So you're seeing those share buybacks. That's the yield they're getting on those. Shareholder yield of 4.62%. Very good. So going back to 2020, you can see they were paying 49 cents here. They raised it up to 53 cents November 22. They raised it up again in November 23 to 57 cents. And so I would estimate that in November of 2024, they will raise it up again and will continue this dividend growth. So we'll have to keep an eye out for that. Overall, this one is one I'm buying. I'm going to continue again. I'm at least adding another 75 shares. I would love it to stay here under $80, under 75 here. Go pull all the way back to 72. Let me add on at the very lows. I don't mind that at all. So I'm going to continue to add to Starbucks at least 200 shares, if not 120, 130 shares there on this one. That's where I'm at with it. Well, let me know what you think of Starbucks in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. If you haven't done so, why haven't you? Take a second, hit the subscribe button. And, hit that notification bell down below as well. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, if you have a company like Starbucks you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I'll try to work it into the rotation. I've got Verizon on the list for a subscriber out there, so I will cover that. Probably Verizon maybe tomorrow if they pull back, or on a day they pull back. I've got one more day this week that I'm going to be doing these Stock Pick of the Day videos. So if Verizon pulls back tomorrow, I will definitely add it to the rotation. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, appreciate you stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing for educational and entertainment purposes. Investing involves risk and money should never invest any amount. Not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select our advice comes from a certified financial advisor.